So in this video, I'm going to explain one very simple multiple time frame trading strategy. And I'm also going to tell you why Escorts qualifies based on this strategy. And from next 1 to 3 weeks perspective, there will be some very good trading opportunities on the upside for Escorts. I'll also be showing you very simple concepts based on demand and supply. And with these concepts, you will be able to identify who remains in control, whether it is buyers or sellers.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.
So this is the fourth part of the multiple time frame trading series. In the first two parts, we've seen how we have analyzed stocks like Adani Ports. This is where we picked up TCS. And last week, we analyzed ACC. So TCS, after consolidating some bit, has moved from something like 2660 to all-time high of 2900. And ACC has not moved yet, but the overall structure remains really good. I also released a video a couple of days back. Do check out this video. This is about trading over the short term with help of VWAP and simple price action. Link to all these videos is given in the I icon here. So based on what we have discussed in the first three parts of the multiple time frame trading analysis series, the first step is to always begin with the monthly time frame. This is where we will start with Escorts. So if you look on the monthly time frame, the trend is clearly on the upside, and in between, look at all these wide range candles that form. This clearly represents that there are some strong buyers that are present in the system, and that is why stock is trending so beautifully. If you also take a look at the wicks of these candles, this is one wick here, one more wick, you have some more wick here, and one more wick between 1400 and 1440. So eventually, over a period of time, this long wick here represents supply. So as time progresses, all the supply related activity here gets absorbed, and eventually buyers are again successful in driving prices higher. This entire month, if you see in December, price is simply consolidating between the range of 1300 and somewhere around 1440. And this is where I feel a trading opportunity for Escorts will show up. Price will consolidate some bit, but I think over a period of time, you will see something like 1500 or even higher in the next 1 to 2 months. One more thing that you have to identify is that as price has progressed higher, I'll just remove these markings here. Look at these long tails. Every time price has come down, buyers have stepped in and they are attempting to drive prices higher. So entire long tail activity here and then price moving higher. This is a sign of strong demand, and this again supports the theory of strong buyers being present in this stock. So the second step in the multiple time frame trading framework is to go down to something like a daily time frame chart to analyze the overall price action and volume related activity. So this is standard candlestick chart. This is the volume panel here. In case subtitles are overlapping, you can just turn subtitles off. So as price has moved from this particular level to something like 1320, just take a look at the volume activity. We can just see one volume related expansion happening on the upside with this particular candle here. But this candle has a long tail. So entirely this is not a bearish candle as such. In general, if you see as price has moved lower, there is just one more volume related expansion here. This candle is a pretty bearish one. But then this is countered again by a long tail candle, volume expanding on the upside. So between the range of 1440 to 1320, if you see, there are not many bearish candles that are present on the chart. So this I will categorize as a bearish candle, no follow through on the downside. And this would be one more bearish candle. In my opinion, this was a strong bearish candle, but again, there was no follow through on the downside. So in my opinion, based on simple price and volume analysis, I don't think sellers are strong yet. I do think that price is consolidating sideways. We are getting some sort of pullback that is completely fine in an uptrend. But had the sellers been strong, we would have got consistent wide range candles with strong closing and clear volume expansion happening on the upside. So that is currently missing in Escorts, and that gives me a confidence that buyers are still present in the system, that is strong buyers, and eventually stock will consolidate. It might move sideways, but it will start rising again in the direction of trend. So in this section, I'm just going to show you how on a daily time frame chart, you can determine demand levels on the chart. So these black lines that you see, 50% and 38.2% are Fibonacci retracement level. I've drawn these by taking the low point at here and at this particular point. The blue lines that you see are again Fibonacci retracement levels, but I've plotted this over this swing low point and this swing high point. So if you look at the chart, there is a clear overlapping here that is happening between Fibonacci levels. This is the 50% and 38.2% retracement level, that is of this region here. And in between you have one more retracement level of 38.2%, that is for this swing region here. So the level between 1299 and 1335, if you see, so 1299 is 50% retracement level of this particular region, and 1309 is 38.2% retracement level of this swing high and this swing low. So this entire region, if you see, this actually is a region of strong demand in escorts. And if you see, price has formed a low around 1300 right at the 50% retracement level here. So whenever you are using Fibonacci analysis, you can use Fibonacci in this way in form of plotting it over different swing points so that you get demand zones that actually overlap, and these are actually high probability demand zones that do work in real time. So this is one more concept that you can take away from this video as to how to use Fibonacci analysis to determine demand levels. And please use this only on a daily time frame chart, because on smaller time frames this is a bit inconsistent. So for those of you who are channel members, please note that Pullback Trading Part 6 is coming out tomorrow at 9 p.m. So please keep your notifications on and please be active in the community section. Now this is the link. This is where I explain a lot of things about the stocks I'm tracking and the sectors I'm tracking. And for those of you who are not channel members, you can just join channel membership for 1 month and watch all 30 videos on price and volume analysis series. Now in terms of demand and supply, if you see, you can also use the principles of trend trading to determine what is a valid demand zone on the chart. So in a rising market, if you see, price usually comes back to the previous breakout level and then again starts moving higher. So if you look at all these points here, these points are actually coming back to the previous breakout point, and that is where, if you see, escorts is currently placed on a chart. So this was the previous resistance zone based on simple horizontal resistance lines that I've drawn. And if you see, this was a prior resistance level that was taken out here. So now when the price is again coming back, this resistance level is now actually a support level. So this is a concept of prior resistance now turning into support, which is actually represented here. So all these previous peaks are resistance, but now when the price revisits again, this becomes support. So again, this is simple price analysis you can do on something like daily time frame chart to determine support and resistance level on the chart. And based on these lines here, the region between 1300 and the region between 1340 is a good demand level. And again, this is very similar to what we saw in Fibonacci analysis. That level was between 1299 and 1335. So again, there is a lot of confluence that is present on the chart. That is, various techniques are confirming one demand zone. So till now we have used monthly time frame to determine that buyers are in strong control, and we have also used daily time frame to determine that volume activity picks up on the upside, it does not pick up on the downside. We have also determined key demand levels based on Fibonacci analysis between 1299 and 1335, and based on simple trending structure demand and supply concepts, we have determined and reconfirmed the Fibonacci demand zone, that is between 1300 and 1340 level. So this is what we have done till now. That is step 1 and step 2 of the multiple time frame analysis framework that we have studied over the previous 3 parts. So the third and final step in the multiple time frame analysis framework was to go down on 30-minute time frame chart and then see how to take entry and exit. And this is where I will explain the multiple time frame strategy to you. So if you look at the structure of the stock, it is clearly forming a structure of lower high and lower low. Just take a look at all these markings. This is a clear sign of lower high forming on the chart. So current structure based on 30-minute is lower high and lower low. If you recollect, on daily and monthly time frame chart, trend is up. So on 30-minute chart, the trend still has to align back with a higher time frame trend. And this is where you have an opportunity on hand. So I'll just remove all these markings so that it is clear. So what I would essentially want is that this current structure should now change to a structure of higher high and higher low. This is where you can apply simple trending concepts to identify entry in the stock. So we determined that region of 1340 and 1300 was the range for the stock currently. I will wait for stock to consolidate a bit more and then break out of the region of 1340 and 1350. Once the stock breaks out here, this becomes your valid entry with 1300 thereabouts as the stop loss. So if we assume that we get an entry at 1350 or 1360, that would be a stop loss of 50 or 60 rupees depending on where we get entry. And then you can scale out based on simple risk and reward concepts. That is, if stock goes 100 rupees higher, you will still be getting 1:2 risk reward. If it goes 150 rupees higher, you will get 1:3 risk reward. So before we move forward, an important announcement. These are the only two channels that are associated with our YouTube channel. Please be aware of all the fake Telegram channels that are using name very similar to ours. And please check the spelling before joining the Telegram channel. The important thing here is to not go behind any complex trading strategy when it comes to seeking entry in a stock. All you need to do is that current structure is lower high and lower low. Wait for stock to consolidate and go back to a structure of higher high and higher low. This is the foundation of trend trading. And let me tell you, even 50 years or 100 years from now, this simple concept will work. The concept of higher high and higher low and lower high and lower low is foundation of price action trading, and this will never stop working. So please stop going behind complex methods. Try and embrace these simple methods. Of course, you will have to spend some time in trying to understand on which stocks you have to apply this concept, because initially it is not that easy. That is why I always recommend that on weekends, analyze at least 100 charts. Don't be afraid of going wrong. Take notes. Over a period of time, you will automatically see your stock selection getting a lot better. There is no shortcut available in the market, and please don't fall prey to the fact that you can get better at stock selection in 1 week. No, it just does not work that way. The last thing that I would like to look in Escorts is a visual way of understanding the relationship between price and volume. And of course, those of you who have watched my price volume analysis series, you will relate to this better. Now, this chart is actually chart of candle volume, where within a candle volume is also represented. So the wider the candle is, the more volumes have come in that particular candle. So if you look at this candle, this is wider than the candle present here. It is also wide than the candle present here. So naturally, this candle here has attracted more volumes. So this chart is actually called a candle volume chart. This is AmiBroker software and it offers it by default. But in case you don't have AmiBroker, you can just access these charts on a website called stockcharts.com. So this is a really good visual way of seeing at what levels volumes have come in. And the first thing that I noticed in Escorts is as price was moving lower, you just cannot find any candle that is wide enough. So this tells you that the selling pressure on the downside is relatively less. And whenever price is trying to move higher, this candle here, one more candle here, another candle here, all these candles are relatively wide, and it just tells you that buyers are currently really strong. And unless and until you see a broad sell-off in the market, Escorts will consolidate a bit more and it should again head higher in the direction of trend. So just click on the eye icon to access all the previous parts of multiple time frame series. And I've also given the link in the description box below and in the comment section below. So thanks a lot for watching this video, guys. Kindly consider hitting the like button if you find the content useful. Have a great weekend ahead. Take care and be safe.